this is a structural change, a once-in-a-lifetime monetary reset.
It's not just going to hurt the United States if that happens. It will hurt everybody.
Welcome back to the Vancouver Resource Investment Conference.
So central banks are buying gold at record levels, in part due to distrust in U.S. debt and concerns over continued money printing. What does this trend signal about the future of the dollar as a reserve asset? We can start with Brent.
Well, I think it's funny the choice of words you chose, because when I used to come to this conference for many years, it was the dollar's going to lose global reserve currency status. And in the last 5 years, that's changed to it's going to lose the global reserve asset status. Because I think people are finally starting to come around to the fact that the dollar's not going anywhere. And it'll be the last fiat to fail rather than the first. But I do think there does need to be a neutral reserve asset. And, I've always felt like gold would be that. A couple years ago, one of the things I said was that part of the reason I didn't believe in the whole BRICS currency coming out as a competitor to the dollar was not because of the gold component was a bad idea, but because the government component was a bad idea. And that gold would go to $5,000 not because governments did something clever and that it worked, but because they messed up and things got bad and it didn't work. And I think that's what we've seen. And I don't think gold's at $5,000 because the United States did something great or the BRICS did something great. I think gold's at $5,000 because the world's kind of a mess, and that's the neutral place to go.
Okay, thank you. Mark, thoughts you got?
We might say that China's done something great, which has helped gold along. And so
how so?
Well, opening up a parallel financial system that's gaining some traction right now, using the RMB to settle or settling in gold and using some liquidity. And they got 32 countries that have the swap line. And while it's minuscule today, and so I agree with you, it's minuscule. But the problem is that we have alternative systems today. So we see Project Enbridge, $55 billion going through that. We have the gold window now through Hong Kong that China is working through. And the point is that we have what I'm calling it, really what we're seeing in gold is not an inflation problem, it's a trust problem, as you sort of alluded to. And so every time we sanction and we weaponize and we tariff, it just pushes people to go find alternatives. And when the gold system, so if you think about the gold currency, when you think about the US dollar as a currency, but you also have the US currency, or I should say more like the payment network, the dollar payment network. And so we can sanction people in that network, but they could just go find another network if there's an alternative. And so I think really what we're seeing is that. We're pushing people out of the party. They're going to find another party. There's other options for them now. Obviously, gold being that neutral reserve asset that they're tending to go to right now. And I think that's a big part of what we're seeing the price appreciation from.
Okay. Let's go ahead and go to Taylor. What you think on this, Taylor? Taylor first, Andy.
Oh, I'm sorry. Did you say?
Yeah, Taylor.
Go ahead, Taylor. I'm sorry.
No worries. No, I think it's funny because you said trend, and I don't think this is a trend, right? This is a structural change, a once-in-a-lifetime monetary reset. And when I look at what's going on, I don't think that most people are prepared, because we know that central banks aren't going to be loading up on USD assets. They've told us as much, right? The World Gold Council did a survey last year, and central banks said 73% over the next 5 years they're going to have less USD assets, not more. 76 are going to have more gold, right? I mean, at the end of the day, we know that gold is being positioned as the center of the new system.
All right, Andy.
Yeah, I mean, just dovetailing off of what Mark said, Enbridge is now operational. So is SIPS, the cross-border payment system, both of which are free from SWIFT intervention and both of which are using gold through, as Mark mentioned, the gold window in Shanghai. What that means, in Hong Kong, through the expansion of the Shanghai Gold Exchange, what that means is that when gold leaves China, it has to come through Hong Kong. The next vault, as we speak, is being built in Saudi Arabia, which is one of the 5 primary members of the Enbridge. But when you take a look at, for example, them signing up the nations in the Asian bloc, the countries in Southeast Asia that have 800 million people, twice the population of the United States, China's largest trading partner by far. You're adding all of these countries, and as you add all of these countries that have the ability to use their own monetary ecosystem, their own local currencies, that chips away at the dollar settlement status. And if they were using dollars, they would have surpluses of dollars that they would put into treasuries. Instead, they're putting it into gold, which, by the way, has doubled the performance of the 10-year treasury for 25 years, let alone the last 2 years where it's decimated it, can't be sanctioned. And they're looking at the United States and our ridiculous fiscal irresponsibility, let alone the sanctions. And they look at a country like us and they say, listen, look what they did to Russia. Now, I'm not making judgment on war or Ukraine or Russia, but they say, look, didn't you guys go into Iraq 23 years ago under false pretenses, destroy the country, topple the regime, and guess what? You're still there? So all of this stuff is incentivizing little by little by little by little, chipping away at the dollar hegemony. And I do think one other piece I'd like to make real quick is that Sergei Lavrov came out and said something that I don't think enough people caught. He said, we are expanding not only the BRICS payment system, BRICS Bridge, M-Bridge, which is cross-border between central banks, and BRICS Pay, which is B2B, retail, like a credit card. All of it is now being expanded into the Belt Road Initiative, which is the largest infrastructure project in human history. It's 75% of human population. So little by little, all of these countries that used to purchase things and settle in dollars and to save excess dollars in treasuries are slowly moving away. So, yeah, I think it has a profound effect over time.
Dr. Nomi, what's your perspective on this?
Yeah, I want to echo actually what you said, Andy and Taylor, in terms of it being a repositioning. Mark as well on the system, and also the fact that there is usage for the dollar, and the dollar isn't going away tomorrow. This is a structural repositioning, and it's a re-anchoring of monetary policy globally. It is in defense of against U.S. policy. It is the idea of repositioning the global system towards China, towards some of the BRICS countries, towards the BRICS Plus, where you look at Saudi Arabia, you look at oil-producing countries, and having a currency that isn't based on the geopolitical whim of the United States. That's how it kind of started, but it also harkens back to history, where the gold standard, or a gold standard, was crucial for credibility on the world stage in terms of trade, in terms of central banking, in terms of anchoring the financial systems of each individual country. So when you look at these payment systems, especially the ones that Brazil is developing, especially the ECNI that China is actually finished beta testing with 55 countries, you're looking at a repositioning of the payment system as well. So we're seeing right now the structural need for gold as a diversifier against the dollar. We see that the value of U.S. treasuries, for example, in central bank land, is less than right now the value of gold reserves in central bank, and the gold has jumped over the euro, and it's second only to the dollar in terms of the volume of reserves through central banks. Central bank reserves are what anchor the financial systems of countries. That anchors the credit system of countries, the lending system of countries, to do things like build Belt and Road. So this is an entire new ecosystem that is being developed with gold as its center, whether or not it's an official standard or not right now. And it is structural, and it isn't going away. It's not being rewound.
Okay. Any of the panelists have any additional thoughts on this topic?
Just a few.
Go ahead, Brent.
So, from my perspective, and I know this is probably not going to be popular, but Trump has done more in 16 months to change the monetary system than the BRICS have done in 16 years. And it's not even close. And yeah, and that is part of the reason why gold is where it's at, because he is fundamentally tearing down what's called the rules-based order. So post-World War II, the Allies created an institutionalized system that basically defined how the world was going to work for the next several decades. And that worked until it no longer favored the hegemon, which was the United States. And when it stopped working, they are now tearing it down. And they're not going to tear it down in a way that benefits somebody else and doesn't benefit them. But it's going to be very chaotic. And that chaos is, in my opinion, what's causing gold to be at $5,000. But before everybody says the hegemon has to fall, because I do think we're at a transformational moment, but I would encourage everybody to take a very close look at US dollar stablecoins, because this has the potential to re-dollarize the world rather than de-dollarize the world. Now, I think when we look out 15 or 20 years, we're going to have a fragmented world, and there's going to be this block that trades with this currency, and there's going to be that block that trades with a different currency. And I don't necessarily think the dollar will necessarily be the one single global currency 20 years from now, but any transition from this system to that system is going to be incredibly chaotic. And it's not just going to hurt the United States if that happens. It will hurt everybody. And that's what will cause gold to go much higher, not because of Enbridge or the Chinese and Hong Kong, Shanghai Gold Exchange. Gold is a put option on government, competency. And I think we all know that government competency is not real high. And I think that's why gold's higher, not because they're doing something smart.
When you say stablecoins re-dollarizing the world, are you talking about expanding the dominance of the U.S. dollar as a currency, as opposed to the question we were talking about being a reserve asset?
Yeah, absolutely. Again, fiat currency is not designed to hold value. They don't want it to hold value. If they wanted it to hold value, they would just use gold, right? So they use a currency that they know that they can debase. It provides them seigniorage, which gives them incredible power. And so I think gold probably goes a lot higher, right? Maybe multiples higher than here. But I don't think the dollar has to. I think everybody in this room probably is not surprised that gold finally got to $5,000. Like, who thought gold was going to $5,000? Yeah, everybody. How many people thought that would happen and the dollar index would be in the high 90s? Not too many people. Most people said the DXY is going to 80 or 75 or it's no longer going to be used. But the dollar is as dominant over other fiat today as it's ever been. And gold's at $5,000.
Well, I guess to Brent's point, the governments want to trade in dollars and save in gold. Where does that ultimately lead to? I guess it depends how these other systems unfold. But I understand your point. It has legs.
And I think it depends on what problem you're trying to solve or how you're trying to come at this question.
I agree.
Right. So there's a few things. So as was pointed out, this is the trend, and it's not going away. And so there's going to be a bid for gold, and gold's price should continue to go up. That also doesn't mean that the U.S. dollar as a currency disappears. So what are we trying to solve for? What are we trying to understand? So yes, gold's going to have a long-term bid. It's going to keep going higher. I think there's a strong case, which I've made before, that I think even the Trump administration wants gold and Bitcoin to go higher, potentially as a relief valve for a lot of this inflation that we're going to have into the system. And so I think we can have the dollar still there. We're seeing the dollar hold at a 90 Dixie, as he said, mainly because people need a liquidity. They need a liquidity for it. So in this crunch, they're going to the dollar for that, not because they're trusting it. So it's not a trust mechanism why the dollar is still holding, but I think it is a trust mechanism why gold is going up. So these are different things.
And it also isn't a new thing. It's just the next transitional period of an old thing, and that's something we need to acknowledge as well. Gold was the standard. Gold became a global standard in 1900. Gold was solidified as a standard after World War II, as was the dollar. There was an exchangeability there. In 1971, that was taken away. What countries around the world that are more adopting gold into their reserves is a means to collateralize their financial systems and their production systems. We are talking about many of the countries that are stockpiling gold in their reserves also as producing countries, in particular China. And so there's an economic component to holding gold and diversifying against fiat. Not that, I agree, the dollar's not going away. But what is happening is the world is repositioning to an anchor monetary system that actually has been around for quite some time. And right now there are other players that are at the top of the production, refining, processing, stockpiling of commodities that have risen or are rising or want to rise to the top of this system.
If I could point out, what she's talking about, though, is very important, but I think I look at it from a little bit of a different angle because, to her point, gold has been here for 5,000 years, and in 1971 we got off of that gold standard, and now the world is sort of going back towards that. But why? What's underneath that? Well, we've already established, one, a loss of trust. So will my bank accounts get seized if I'm Russia? I don't even have superpower. I don't have nuclear weapons. What chance do I have? But what about other types of trust? Like, do they really have the gold, and will they really deliver the gold to me if I want it? Because I'm also not a superpower with nuclear weapons. And so really what we have is a trust breakdown. And so I would like to point, as being the only Bitcoin guy up here on the panel, that really what the world needs is a neutral settlement layer. So we need a way that we can transfer value that nobody can stop, block, or prevent. And then we need an asset that could also be neutral, that nobody can artificially inflate and steal, censor. And so that's what we need. How do we get that? Well, we could try gold. The problem is that gold reinserts trust back to the institutions. So now we have to trust who has it, who holds it, who says they have it, and who will deliver that. And so it seems that when you look through thousands of years of history, what changes the world is technology. We used to need an orchestra to play music, and now I can stream it. It's kind of interesting. And so going back to an ancient system maybe doesn't fix the actual problem we're trying to solve, but that's a longer trend.
Okay, hang on, Brent. Let's go Taylor real quick.
Yeah, it's funny because I would argue one of the common criticisms I always hear with gold, right, is that it's outdated, ancient, wouldn't fit in the current system. But when trust is collapsing, right, we're not looking for convenience. We're looking for a true store of value, something that you can trust. And I think with gold too, the moves that we're seeing with the Shanghai Gold Exchange and the gold corridor and these physical vaults that are being built for physical settlement, right? We're already seeing gold being used in that way right now, and I think that's only going to continue to grow.
Go ahead, Andy.
Yeah, the whole point of the expansion of the Shanghai Exchange is to have multi-jurisdictional vaults that everyone sprinkles gold in all of them. So it's not just one vault like the Bank of England says to Venezuela, no, you can't have your gold back, whether they deserve it or not. That's not the point. So yeah, I think that if I had to guess, it would be some sort of a blockchain-based system with multi-jurisdictional vault settlement in gold. And, who knows how it all plays out, but you can certainly see that gold is becoming very important and being somewhat reintegrated into the monetary system of many of the countries in the global south. And I would ask, who the hell's bringing in all the gold into this country? Every single month for 16 straight months, it seems like every month it's a record month in deliveries on COMEX, and nobody's talking about it. Month over month over month over month, billions and billions and billions and billions have been delivered into COMEX. Does someone here, maybe the most well-funded and well-informed traders in North America, know something that we all don't? Gold is far more important than we're all being led on to believe, would be my take on it.
Go ahead, Brent.
One thing I was just going to say is I think it's important to remember, because I really do think it's a trust issue. I think you're totally right on that. But I would point out that most of the demand for physical metal, although you make a very good point about the inflows, and I agree with you on that, I would say it's been driven by foreigners buying gold as opposed to people in the United States buying gold. If you look at, especially on the futures market, in both gold and silver, if you look at the speculative position, it's actually small, and it's been falling. So it's not like the speculators are driving this move. And part of the reason people in other parts of the world are driving it is not because they wake up every morning and say, Jay Powell's out of control. They wake up every morning and they say, wow, my local currency is falling even more than the dollar. If you look at the average price of if you average the BRICS currencies versus the dollar, it's down 20% over the last 5 years versus the dollar. So, when Russians and Chinese and South Africans and Brazil, when they're buying gold, they're buying it because their local currency, they don't trust it either. So it's not just that the world is rejecting the dollar. In many ways, the world is rejecting just fiat in general as a store of value. So I just think, whatever system comes next, I don't think it will be a gold-based system. But that doesn't mean that gold and silver won't go much, much higher. I just don't think that the governments want a hard currency. They may be forced onto it, But I don't think that's what they would prefer to replace whatever comes next with.
So you're saying that they want to print more money?
So this is another example. Like every one of the BRICS countries has expanded their monetary base more than the United States over the last 25 years. Now, those are charts that'll never show up on the popular media because that's not the popular narrative. But yeah, does the U.S. print money? Of course they do. But so does every other country. And that's why their currencies have fallen even more than the dollar.
Go ahead, Dr. Num.
It's definitely true that gold is not just a dollar play. I mean, it is in many instances and for many reasons, but it also is a fiat currency play. It is also the idea of having something that is objectively valuable, whether it is stored in a new vault, whether it's a portion of central bank reserves or what have you. But the fact that it is a portion, a growing portion of central bank reserves also relative to all debt, that's national debt as well as international debt, is an indication that in this current environment, central banks are moving towards having anything that might not be their own currency or might not be the dollar, and the only alternative to that is gold. And it's interesting that the BIS, the Bank of International Settlements, the central bank of central banks, not only repositioned gold as a tier 1 asset to allow it to be fungible or as collateral against debt of the banking systems of those countries and internationally, but that our banking system has not yet adopted the idea of gold being fungible into our banks because our banks actually aren't that stable. If you look at all of the debts, all of the delinquencies, et cetera, all the over leverage, but other countries are actually also trying to get their banks to be stable. So it's central bank, but then it's also repositioned down to their private banks and then into their individuals. Right, Western people aren't buying as much gold as the Eastern country populations and local institutions, but it is changing. So inflows into ETFs in the West were at record highs last quarter in terms of growth. So it's looking like that trend is moving down towards the Western investor, and the repositioning of, for example, Morgan Stanley, JP Morgan, talking about people going down into commodities instead of debt, instead of bonds. So it's still a repositioning away from any debt into something that actually holds value net of interest rate levels or you're right, or the Fed or J Powell or any of those policies.
Okay, so it sounds like the consensus here is that gold is going higher. Okay, that's something I heard from all of you. If you all were to simplify it for the average Joe and Jane, what should they be thinking about? What should they take away? Go ahead, Dr. Numi.
I think you just don't fight that repositioning and that flow. And that if the entire central bank and financial system is not changing overnight away from fiat into gold, but is moving large amounts of money, not just through their banks, but through their individuals and populations as well, that is a good indication of fundamental reevaluation of gold and of silver and of copper and basically of processed commodities. And I think this is a good time. You're all here because you want to or are already investing in commodities. For those that are, to look down the curve, to look at the supplier of those physical assets, to look at the miners that are all here, to look at the junior miners, to look at the explorers that are going to feed into this multi-decade, perhaps century form of repositioning back into hard assets.
Go ahead, Taylor.
Yeah, I think that we are, like I said earlier, living through a monetary reset, and I just don't think enough people zoom out and look at the big picture. We were talking about this backstage, how everyone's so hyper-focused every single day on price movements, right? And what's happening day by day, hour by hour, minute by minute. And I think at the end of the day, again, we all have to take a step back and just look at these big macro events that are happening and understand that I don't think anyone has enough gold, to be honest, for what's coming next.
Andy.
So this is kind of my take on how the players at the top level do things. In 2017, after 6 years of gold getting hammered and central banks selling it, the German Bundesbank made a very big public deal of give us back our gold. They're doing it again now because we didn't give it all back. It took several years for them to get what we gave them back. And shortly after that happened, which was very unusual to me, and after 6 years of being killed by falling prices, the Dutch National Bank, the Bank of Austria, the Bank of Poland, Hungary, Turkey, the Czech National Bank, they all said the same thing. Give us back our gold. From the Bank of England and the New York Fed, they wanted to reshore it. In 2018, those same banks bought more gold as a group together as they did in the 60 years previously combined. And then, as Nomi said, 2019, by the way, that number doubled. And then miraculously, the BIS says, guess what? It's now a tier one asset. Now, do you think they weren't clued in on that? Now, I've been screaming since 2017, the central banks are buying, the central banks are buying, the central banks are buying, and reshoring. And that would have been all you ever needed to know, but I'm going to say it again. And I'm going to tell you how it kind of is working with silver right now. But since Trump won the election, we've become net importers of gold. And if I had to guess, probably one of the biggest in the world. Every single month, the most well-informed traders on the planet. And where is the media talking about this? This isn't just a little bit. This is hundreds of billions of dollars. Every month, every month, every month coming into COMEX. And silver, every month. Now, here's the interesting thing about silver as it translates to how they do things. Now, we haven't found out how they're going to do things about gold yet. Although if you listen to Judy Shelton, she'll tell you July 4th of this year, Trump is going to peg it to the back end of the bond market. That's part of a longer story. That's what I talked about in my breakout today. But let's talk about silver for 1 minute. Every month, billions and billions and billions and billions, not a damn word by anybody about this. And in December, it was after two margin rate increases, it was the largest delivery in the history of the COMEX market in silver for the month of December, 68 million ounces. Now, if a mint box of Silver Eagles weighs 500 ounces, weighs 42 pounds, who bought 68 million ounces? And so far this month, which is a non-delivery month, we're over 40 million ounces. Every single month for the past 16 months, between 40 and 60 million ounces on average has been delivered. Now, just by chance, it's now a critical mineral. What the hell? And then just by chance, President Trump says we're going to put flora underneath it, under all the critical minerals. And just by chance, now they're trying to get a national stockpile. What I'm trying to say to you is that this is not by coincidence. Whoever does this in North America, whoever is standing for delivery for this kind of bread, they know where it's going. Just like the central banks did in 2017, 18, and 19, front-running the BIS saying it's tier one. I don't know where it goes, but I will tell you the people at that level sure seem to know where it's going.
Mark.
That was so passionate, Andy. Thank you for that. I would like to point out, first of all, he referenced 2016 first, when he first started, I believe. You talked about going back to 2016. So, first of all, I would say zoom out. These things happen over long periods of time. And if you're sitting looking at your chart on a weekly or monthly or quarterly basis, trying to understand, well, CPI changed to this and the positive real yields did this, but why is gold not responding? You're going to lose it. So we want to zoom out. These things take long periods of time, as you might realize. Gold went nowhere for almost 4 years under record-breaking stimulus in 2020. Record-breaking CPI at 9%, and gold went nowhere for 4 years. And so zoom out, I would say, for a long term. I would also just maybe urge a little caution, to the point that Andy made, which is very good points, the standing bid, the critical minerals. Those aren't investors buying it. Those are critical minerals because we need drones, and we need microchips, and we need circuit boards. And so they're buying them for non-monetary uses, so maybe just don't get too confused on that. But ultimately, I would say is to sort of break down and understand the underlying currents that are driving this long-term trend. I think all of us do agree that there is a long-term trend in play here. And so the way that you play a long-term trend is to get into position, and you wait for that to develop for a long period of time. The best way to play it is to find the earliest trends that you can get into and get into those and allow for those to develop as well. And so while you most certainly have some hard assets that can't be inflated away in your portfolio, it might make sense just to put a little bit of Bitcoin in there just in case it catches on.
Hear, hear. All right, you may want to put a little bit of dollars in there too. Go ahead, Brent.
People have probably heard me say this before, but I actually, and it sounds like a joke, but I actually really believe it. And I think you will be better prepared for the world ahead if you go watch 8 seasons of Game of Thrones than if you read an economics textbook. And it is funny, right? But it's also the truth. I think that's where the world is headed. We spent 30, 40, 50 years globalizing, and the pendulum swung really far in one direction, and it's not swinging that direction anymore. And I think it's going to be really hard to get it to go back in that direction, and I think it has a long way to go in the other way. And projects will get funded that shouldn't get funded because of national security, and things that should get funded won't because of priorities for national security. And I think there's this popular theory that all you have to do is walk up and punch a bully in the nose to get them to back off, and that it always works, and but that's not how it usually works. Usually, if you walk up and try to punch the bully in the nose, he knocks your teeth out. I've seen it happen. That is reality. And if that wasn't the way it usually was, bullying wouldn't exist in the first place. And so I think it's very easy to think that the United States has been the global bully for 40 or 50 years, and now there's a trend change, and that automatically means the United States falls and somebody else rises. And I just don't know that that's necessarily the truth. And I think we're in a period of time where it's that famous Dalian dialogue, the strong do what they want and the weak suffer what they must. And I don't like that, but I think that's the world we're in. And so I would caution everybody against thinking that just because the United States is the bully, that you think they're going to lose, because I don't think they're going to lose.
Thank you all for your valuable insights that you shared today. Let's give them a round of applause, audience.